Welcome back. Today we are diving deep into the institutional flows that significantly shape the Indian stock market. We're talking about the foreign institutional investors, FIIs, and domestic institutional investors, DIIs.
That's right. Understanding whether the big foreign money is coming in or going out and how our domestic institutions are reacting gives us crucial insights into market sentiment and potential direction. We've got the data for the entire fiscal year 2025, from April 2024 right through to March 2025.
It's been quite a year with distinct phases. Let's break it down month by month and see how the FII and DII activity played out. We'll start with April 2024.
Kicking off the fiscal year in April 2024, FIIs started with significant selling. They registered a net outflow of a hefty 35,692.19 crore rupees.
Oof, a strong start on the sell side from FIIs. But how did the DIs respond?
The DIIs completely countered that move. They went on a buying spree, putting in 44,186.28 crore rupees. This strong domestic buying absorbed the FII selling, leading to a net institutional inflow of 8,494.09 crore rupees for the month. The market impact was described as neutral.
Interesting. So DIIs holding the fort right from the beginning. What happened in May 2024? Did the trend continue?
It certainly did. And the FII selling actually intensified. In May, FIIs pulled out even more, with a net outflow of 42,214.28 crore rupees.
Wow, that's over 77,000 crore rupees withdrawn by FIIs in just 2 months. Did DIIs keep up the pace?
They absolutely did. DIIs ramped up their buying further, investing 55,733.04 crore rupees in May. This strong commitment meant that despite the heavy FII selling, the net institutional flow was still positive at 13,518.76 crore rupees, and the overall sentiment was marked as positive.
Okay, 2 months of heavy FII selling absorbed by DIIs. Did June 2024 bring any change?
Yes, a noticeable shift in June. FIIs turned positive, albeit modestly. They recorded a net inflow of 2,037.47 crore rupees.
A reversal. And the DIIs?
DIIs continued their buying, though slightly less than the previous month, with a net inflow of 28,633.15 crore rupees. With both FIIs and DIIs buying, the net institutional flow was strongly positive at 30,670.62 crore rupees. The sentiment remained positive.
Good to see both showing buying interest. How did July 2024 shape up?
July followed a similar pattern to June. FIIs continued their buying trend, investing 5,407.83 crore rupees.
And DIIs? Still bullish?
Yes, DIIs maintained their buying stance, adding 23,486.02 crore rupees. This resulted in another month of healthy positive net flow, totaling 28,893.85 crore rupees, and continued positive market sentiment.
So, a positive summer with both institutions buying. What about August 2024?
August saw FIIs revert to selling. They registered a net outflow of 20,339.26 crore rupees.
Back to the sell-off pattern. Were the DIIs still there to support?
Absolutely. DIIs stepped up significantly again, buying equities worth 50,174.86 crore rupees. This strong domestic support more than compensated for the FII outflow, leading to a robust net positive flow of 29,835.6 crore rupees, maintaining the positive market sentiment despite FII selling.
The resilience of DII buying is quite remarkable. Moving into September 2024, what did the flows look like?
September was another positive month, similar to June and July. FIIs showed buying interest again, with a net inflow of 12,611.79 crore rupees.
And the DIIs continued their streak?
They did indeed, buying 30,857.3 crore rupees worth of equities, with both FIIs and DIIs firmly in buying mode. The net institutional flow was a very strong 43,469.09 crore rupees positive, reflecting positive market sentiment.
Okay, that marks the end of the second quarter. Now heading into the festival season, what happened in October 2024?
October brought a sharp reversal, particularly from FIIs. They engaged in massive selling with a huge net outflow of 1,14,445.89 crore rupees.
Over 1 lakh crore rupees out. That's substantial. Could DIIs possibly counter that?
DIIs put up a massive fight, buying heavily with a net inflow of 1,07,254.68 crore rupees. However, the sheer scale of the FII selling was too large, resulting in the first negative net institutional flow we've seen this fiscal year at negative 7,191.21 crore rupees. The market impact was noted as neutral, likely due to the DIIs absorbing most of the selling pressure.
A major month of FII exodus. Did this continue into November 2024?
The FII selling pressure persisted in November, though less intense than October. FIIs recorded a net outflow of 45,974.12 crore rupees.
And DIIs? Still buying?
Yes, DIIs continued their support, buying 44,483.86 crore rupees. But again, it wasn't quite enough to offset the FII selling, leading to a second consecutive month of negative net institutional flow, amounting to negative 1,490.26 crore rupees. Sentiment was neutral.
2 consecutive months of net outflows driven by FII selling. How did December 2024 fare?
December saw a slight easing of FII selling. The outflow reduced to 16,982.48 crore rupees.
And DIIs?
DIIs continued their consistent buying, adding 34,194.73 crore rupees. This time, the DII buying was strong enough to overcome the FII selling, pushing the net institutional flow back into positive territory at 17,212.25 crore rupees, reflecting positive market sentiment as we headed towards the year end.
Good to see a positive end to the calendar year. Kicking off the new year, what did January 2025 hold?
January saw another significant bout of FII selling. They pulled out 87,374.66 crore rupees.
That's another huge outflow number. How did DIIs respond this time?
DIIs responded with massive buying, investing 86,591.8 crore rupees. It was almost a perfect match, but the FII selling just edged it out, resulting in a marginal net negative flow of negative 782.86 crore rupees. The sentiment was marked as neutral.
Almost perfectly balanced, but FII selling tipped the scale slightly negative. What about February 2025?
February continued the theme of FII selling with a net outflow of 58,988.08 crore rupees.
And the DII counteraction?
DIIs remained robust buyers, putting in 64,853.19 crore rupees. This strong domestic buying successfully countered the FII outflow, leading to a positive net institutional flow of 5,865.11 crore rupees for the month, reflecting positive sentiment.
All right, heading into the final month of the fiscal year, March 2025. How did things conclude?
March ended the fiscal year on a positive note, much like June, July, and September. FIIs turned buyers again, though modestly, with a net inflow of 2,014.18 crore rupees.
And DIIs finished strong?
Absolutely. DIIs continued their consistent buying pattern, adding 37,585.68 crore rupees. With both institutions buying, the net flow for March was a solid positive 39,599.86 crore rupees, ending the year with positive market sentiment.
So, looking back at the entire fiscal year 2025, the standout trend is the unwavering support from domestic institutional investors. They consistently bought month after month, acting as a major shock absorber.
Definitely. FII activity was much more volatile, with significant outflows in many months: April, May, August, the massive selling in October, followed by November, January, and February. However, there were also periods of buying in June, July, September, and finally March.
It really underscores the growing strength of domestic capital. Even during periods of intense FII selling, DIIs often managed to keep the overall institutional flow positive or limit the damage significantly.
Precisely. The narrative for much of the year was FII selling countered by DII buying, leading to neutral or even positive sentiment, where heavy FII outflows might have previously caused panic. The months where both bought, June, July, Sept, March, saw particularly strong net inflows.
It's a fascinating dynamic to watch. Of course, these flows are just one piece of the puzzle when looking at the market.
Absolutely. And a reminder to our listeners, this analysis is for informational purposes only. We strongly advise consulting with certified financial experts before making any investment decisions based on this or any other market data.
Well said. Understanding FII and DII activity provides valuable context, but thorough research and professional advice are key. If you found this deep dive into institutional flows insightful, please like this video, share it, and subscribe for more updates.
Thanks for tuning in, everyone. We'll be back soon with more market analysis.